Okay, ladies and gentlemen, may I have your kind attention, please? Our seminar will start in about 1 minute. Please find yourself a seat to settle down. Thank you. Next, I will hand over to Dr. Eva Chen for a speech.
Thank you, Venus. Welcome to the seminar organized by HKIRA and AMTD. I'm very glad today to see all of you here physically, and also I understand there are a lot of participants. They are now online joining this event. After almost 18 months, we are in the COVID situation, and then there are lots of physical events actually discontinued. So I'm very glad today to see all of you here today, and very welcome to all of you to the event. And also, I'd like to say thank you to AMTD to sponsor this event so that we can have all our speakers here, and also more than 20 participants here today joining with us. So, I'm here just to say welcome and thank you. So let me pass the time to Venus. Thank you.
Thank you. Hello everyone, my name is Venus Zhao, Chairman of the Hong Kong IRA Event Committee and Deputy General Manager of Hong Kong Office of Sydney Holdings Corporate Limited. I would like to invite our guest speaker here on stage, and I would also like to introduce them first. So first of all, Mr. Eric Poon, Executive Vice Chairman, Association of Family Offices in Asia, AFO. Rocky Tan, Director, Head of Policy Research, Hong Kong Financial Services Development Council. Online, we have Mr. Jin Zi, Founding Partner, Coronation Capital. And Mr. Derek Chung, Chief Strategy and Business Development Officer, Head of Investment Banking, AMTD Group. And Ms. MC Lee Chung, Group Treasurer and Head of Corporate Development at Hong Kong Incorporated. Thank you all. So for the audience online, please feel free to type your questions in the chat box of Zoom platform. And please feel free to participate in our discussion by asking your questions and sharing your views. So we now can begin. First of all, today we have the topic of family office. So it will be a 1 hour discussion about how to target family office from IR perspective. And today we will share our panel speaker will share our views on the below 4 topics, including Hong Kong becoming a leading hub for family offices, what investment targets family offices look for, how to target family office from IR perspective, and then comes the question Q&A section. So first of all, I would like to have the question for Mr. Rocky. A paper released by Hong Kong Financial Services and Development Council, FSDC, in December and July 2020, respectively have the paper, Hong Kong, the Smart Choice for Your Family Office, and Family Office Wisdom, a Family Office Hub in Hong Kong, offered some recommendations on how Hong Kong to become Family Office Hub in Asia. Mr. Rocky Tong, as Head of Policy Research, Hong Kong Financial Services Development Council, leading the team responsible for conducting policy research and industry surveys for formulation of proposals to the Hong Kong Special Administrative Region Government and financial regulators. Would you please elaborate more about these 2 papers? Thank you.
Thank you very much. First of all, I would like to thank HKIRA and AMTD for having me. Representing the Financial Services Development Council, which is a cross-sectoral body to the chair's government, we really appreciate this opportunity. In terms of those 2 papers, one of those is in collaboration with the chair and Hong Kong, and this is for the fact that the 3 parties, together with the chair's government, we are very much into developing Hong Kong as a family office hub. The paper that I was mentioning a moment ago, published back in December 2020, that paper was just a highlight of the numbers, showcasing where we are, what we do, and why we are going to be so good at it. But going back to the paper back in July 2020, it was a paper that we have set for some recommendation for the Hong Kong government's consideration, knowing that not only Hong Kong is targeting the family offices, we must not rest on our laurels. We know that we have been doing very well, but then there is room for improvement for sure. Not going too much into details. There are 4 specific areas that we wanted the government and respective regulators to look into. One of those is in relation to the regulatory clarity. The other is about tax recommendations. Third part is in relation to talent. And last but not least, it is about establishing one-stop shop that is very much needed for high net worth individuals and families like family offices. So in relation to regulatory clarity, Hong Kong has a very clear regulatory regime. However, knowing that the SFC actually regulates the respective entities by their activities. So there's no specific carve-out regulation for family offices, so to speak. And so, we want to ensure that for single family offices, which are only managing the family's money, they are not going to be regulated. And in fact, this is very much the regulatory intent of the SFC and HKIRA. So we want to make sure that this is going to be spelled out more clearly. That's the first part. Second of all, I mentioned tax considerations. Knowing that family offices are rich, and at the same time they still want to be richer. It's just like all of us, right? That makes sense. So we want to see how and if and how Hong Kong can set aside some tax considerations for these families. Well, it makes a lot of sense. We have done that for the other sectors too. And so we made that recommendation, and it was quite well received by the government. So I'm going to talk about that later on. Third part is about talent management or talent development. Knowing that people serving family offices are not exactly like public entities only. These people have to deal with family issues and family relations and administrative matters. This is something that we will need to prepare because after all, our bankers have not been trained adequately in that regard. So we want to set aside some resources to do that. Last but not least, and this is very much the core of the issue is when a new family office is set up in Hong Kong or any other region, they want to have a one-stop service. So these high net worth families and individuals, you go to any other jurisdictions, they are rolling red carpets for them. We want Hong Kong to do the same. So this is exactly what we recommended, and the Hong Kong government has actually listened to us, and I can talk more about that later.
Thank you, Rocky, for enabling us to know more about what support we provided from the talent, the resources, and also from tax perspective. And I think that there may be some more that Hong Kong government can further provide in the future. What would you think that would be, and how to enhance the attractiveness to help for family offices?
Okay, so going back to those 4 pillars that I mentioned: regulations, tax incentive, talent development, and coordination. So I'll address that one by one. In terms of regulatory clarity, like I said earlier, SFC has already set aside clearer guidance in terms of their regulations or regulatory regime. So we probably don't have too much to ask for going forward. In terms of tax consideration, you can see that in the budget speech prepared and delivered by the Financial Secretary back in February this year, he has said that the government will be looking into potential measures in introducing some tax incentives for family offices. I'm not saying that this is going to be delivered for sure, but at least the government is looking into it. So this is very encouraging. In terms of talent, we can see that not only HKIRA but AMTD. We also see a lot of other online events happening around the city. developing Hong Kong's talent. So hopefully that this is going to continue, the momentum is going to carry. In terms of the one-stop shop, I'm very glad to report that the government, again, in its budget speech, in the financial secretary's budget speech this year, we have seen that some resources have been set aside for the Invest Hong Kong to set up its own research, own team. And, in collaboration with the Financial Services and the Treasury Bureau led by Mr. Christopher Hui, this office is going to drive, be the coordinator for all family office matters. So, if any of you in the audience are going to set up a new office, or even if you are running your existing family office, do reach out to them. I'm sure Alex and the team would be very happy to help you.
Thank you, Rocky, for providing us very valuable recommendations. Now, the next question I will come to Dr. Eric Poon, Executive Vice Chairman and Association of Family Offices Asia AFO. As you have been in private equity and asset management for 27 years and specialized in investing in tech champions and supporting investors to assess the touch to assess private deals and public companies, can you please share with us what are the market opportunities and government trends for the family offices?
Sure, thank you. Again, on behalf of AFO, thank you for having us, Hong Kong area for sure. As mentioned, Eric has been sort of 27 years in the industry, partly doing IRO for 27 years, and in addition to that, in private equity and hedge fund. I guess most of you wanted to know, how do you pitch to that office effectively in the IRO Association? I guess the opportunity are quite tremendous, and I guess the way to position it is, if you could think about how vertically and horizontally you could help a given family office from the idea that you're pitching, then that would be tremendously helpful. I guess first and foremost, what do family offices look at? I guess a property family office, they might be looking at how do you vertically and horizontally help them in that regard, and that way you could attract them into your investment and your ideas much more easier. In terms of what type of trend and investment they might be looking at, they look at a lot of alternatives, namely private equity, private debt, financing, and also even real estate, obviously. And I think healthcare, education, and very importantly, ESG. I think the new phrase I really like is called do well and do good. Do well is make money commercially. Do good is how do you contribute to the society and the world. Why? Because it could be first gen, second gen, third gen, or even nth generation. They want to leave a legacy. And even on the second, third gen, their grandpa, their dad has done tremendously commercially. And I think ESG, CSR is such an important concept. So I encourage everyone to think about how do you spin your idea and angle to incorporate that ESG component into the mix. I'm also an advisor to the United Nations. So when I advise the UN, SDG goals are extremely important. Again, that is something that all the families are really looking at quite a lot, in addition to all the stuff you read in the newspaper.
Thank you, Dr. Eric, for providing us some ideas of how to pitch family office and the issue of the family office, and also the topics that you just mentioned is very valuable to our IR practitioners. And online we have Mr. Jin Zhou. Mr. Jin is the founding partner of Coronation Capital and has 14 years experience in private banking, wealth management, and trading. Let's hear from him his experience and views on the subject. What investment targets family office are looking for? Thank you.
Okay. Thank you. Hope you can hear me clearly. And we are as a single family office originally. So we start from a single family office, and the principal is a US listed TMT sector, the founder of the TMT sector. So the beginning, the reason he wants to set up the family office is because he wants to diversify his wealth, and also he wants to have a liquidity portfolio and then generate stable income. And so that's why originally we start from a major fixed income portfolio and then listed equity as a core allocation. As we grow, and he has his circle in the new economy in China, they have a circle of friends who are interested in the family office as well. But different families have different investment objectives, and also they have different risk profiles. Even the family itself is also changing. Maybe they start from like the first of our principal clients, they start like a stable fixed income portfolio, but later once they gradually understand the market, they tend to have more investment opportunities. For example, they prefer some alternative investment, direct VC style investment. They even wants to have some hard assets around the global. So the investment targets is really different from the stage and also from different families. So as a family office, we have to be very flexible and also to be open-minded to any possible opportunities which can generate income for the family.
Thank you, Jin Zhao, for providing your idea of the appetite, investment appetite of your family office, and also how it changed over time. Now, I will come to the question for Derek. So family offices have increasing appetite for investing their capital in listed companies. Mr. Derek Cho is the Chief Strategy and Business Development Officer and Head of Investment Banking of AMTD, and has over 16 years in investment banking, including originating, advising, and executing capital markets and M&A transactions and corporate clients across Asia. You have lots of deals related to family offices and listed companies. Can you please share with us what qualities of listed companies that family offices would consider in their investment?
Thank you so much, Ines, for the introduction. So, as one of the core subsidiaries of AMTD Group, AMTD International is a full-service investment bank, and also we have a asset management business with a asset management about $4 billion. So, amongst the many clients we serve, those include high net worth individuals, single-family offices, as well as multi-family offices. And I think as many of the speakers have touched on before, various results. I think really the investment objectives can vary by quite a bit. So I think in terms of what they're looking at, the risk appetite will differ quite widely from one family office to another family office. But I think in terms of listed companies, what we have observed is that Hong Kong is obviously a great place. We have a lot of access to news and opportunities in mainland China, particularly in the new economy sector. I think very close to the region have very strong networks in China and they're able to source many of these deals. But I think many of these deals, increasingly we've noticed is that they are very hot in the markets. And for a family office, in order to get sufficient allocation at the point of listing, it is often very difficult because many of these deals are often oversubscribed multiple times at the point of IPO. So I think we notice a trend as there's an increasing appetite for private assets, moving earlier on from pre-IPO and we want to think earlier rounds as well, around B, round C, etc. for the family offices. And I think one of the advantages of such is that firstly they can get it on a potentially lower valuation, and secondly they can build in some of the capital preservation mechanics into the deal as opposed to straight equity, just because the company. So those are the type of assets that we are seeing trend that's quite a growing segment.
Thank you, Derek, for sharing with us the private deals and the assets and other kind of assets that family office may be interested. And on the other hand, from the IR perspective, we hope to check family office to invest in listed companies. So we would like to invite Elsie, the Group Treasurer and Head of Corporate Development and Investor Relations at Sun Hung Kai and Corporate Limited, to share your view on how to target family office from IR perspective. Thank you.
I would like to thank the HKIRA and also AMTD Chapter here. Just to have a pretty much we are effectively now a listed family office. However, our journey, our transformation journey took about 38 to 40 years. Sun Kai & Co started as a wealth platform with retail broking, consumer lending, and also wealth management about 30 to 40 years ago. And it was listed in the 80s in Hong Kong. I think most of us here was either a child or kindergarten or still maybe in the mother's womb. But irregardless, the journey has started together with the development of the Hong Kong, I would say the general economic dynamics. And through the last 38 years, we have sold off most of our core operating business. Right now, the broking business and the wealth business has been sold to China Everbright about 6 years ago, which we closed the transaction last year. And then with the capital from the sale, we embarked a journey of a family office officially as a listed company. So what we have done is we use this money that we got from the sale to seed our investment management business. And subsequently last year, we also got licensed from the SFC with the support of the regulators. We officially started a family office style seeding fund management business. So it took us about 38 years to do that. And from an IR perspective, as a listed company for other investors, including family office investors, our experience has been quite unique. So number one thing is how to crystallize your business strategy while doing a business transformation. I would imagine as a family office, which we invest a lot in alternatives, or I would say 80% of our current investments is only in the investment, right? It's only in alternative sector, which is not public market. It's hard to explain or demonstrate record while in the process of that, But I think the key thing is outright have a very clear corporate strategy of where you're starting, the heritage, your advantage, your know-how, your strength, and also be able to demonstrate a path that you're trying to endeavor along the way and show people where's the end game they actually want to achieve. Early on, financial result might be hard to prove, especially by ourselves. Our broking business, retail lending business is really transparent in the sense it has been there for 30 years and putting a very strong cash flow adding dividends up to the whole company. But on the other hand, our new business, especially our investment book, as well as our funds investment, is a third party money involved. And it's much harder to explain into the longer brewing time. So as you know, companies in Hong Kong, a lot of them are going through what we understand also a transformation because of technology impact, regulatory changes. So the path is given. The investors are very interested in knowing what are our major KPIs, how our KPIs for ourselves emerge and evolve over the years. And what is the investor upside, especially on the equity end, because we have a bond program listed, we have a recognized bond program, we have a stock out there. And we also gone through a wave of changes of shareholder structure as well. We have strategic shareholders like CDC as part of our Dubai Ventures, our shareholders, and we also have increasingly diversified public investors from mainland China through the Connect. So from an IR perspective, we need to be able to address the different needs and different requirements. Somebody asked about the dividend. We need to explain that while we're growing, we're not doing it. We are not changing dividend policy. We need to be able to justify it. So the commercial justification and strategic justification or business strategy has to really come through clearly for any institutional or family investors to be able to invest in our stock or be interested in our either equity or credit story. So I think that from an IR perspective would be very challenging in a sense that the questions and the dynamics come from two ends because bond and equity investment go for different types of returns. One wants a stable return, one wants a little bit of dividend but mostly upside. So how to balance that and crystallizing our strategy with limited amount of transparency over time, that I think is something that as an IR or as a corporate strategy person, that you need to, gradually be more proactive in presenting the market and communication, and also in when you illustrate your numbers and setting KPIs for your investors. That's something that you need to able to crystallize upfront. Otherwise, people get to 20 minutes and they lost interest rate. So I think that transformation has to be staged very clearly, where you are, how you want to get it, and what are the KPIs you're trying to put forward for people to measure your progress. I think that will be the key, takeaway from our probably 38 years transformation.
Thank you, Andy, for providing us very valuable tips for IRs about how to crystallize the strategy and how to address the different needs of different types of investors. Okay, now, Rocky, so I have the next question for you. Is the second part of this discussion is about the ESG and family office. So as more and more investors are attaching importance to the performance of listed companies in the ESG aspect, we'd like to understand how family offices view ESG factors of listed companies in their investment. And then we also know that paper also released by the Hong Kong Financial Services and Development Council, FSDC, in July 2020, titled Hong Kong Developing into the Global ESG Investment Hub of Asia. So what are the key findings in this report?
Okay, I'll answer your second part of the question first, and then go back to the first part, which relates to family offices. So, developing Hong Kong as a green finance and ESG investment hub has been one of the key priorities of the SDC. We have been doing this since as early as 2016, when nobody actually talked about green bond in Hong Kong. Back then we released a paper and advised the government to first introduce the green bond to Hong Kong, led by the HKIRA government, and second to organize a body, industry-led body that convenes all the people who are in the field of green finance. So a lot of those recommendations have been executed and delivered by the government, thankfully. And since then, we have seen the ESG investment fight here in Hong Kong. And fast forward to 2018, we published another paper in relation to ESG investment. We told the world and the Hong Kong government that this has happened before us, and we need to make sure that numbers are clear. And so the companies are going to disclose such metrics more properly. And also, when the largest asset owner in Hong Kong being HKIRA, they should be incentivizing the market to drive more resources to green and sustainable investment. So a lot of these recommendations have been executed by the government. So going back to the 2020 paper, we want these bodies and regulators and government commissions to ensure that coordination is actually there. Again, it is very similar to what we had for the family office paper. Coordination within the Hong Kong aim is very important, and we want to make sure that this is going to be seen. Thankfully, we have seen that the cross-agency steering group has been established, and afterwards there has been a roadmap that being delivered. And what I'm trying to say is that in Hong Kong, we have a very good ecosystem, and we have major financial services firms being here, and we have fantastic companies, including Shanghai. So we have the ecosystem here, thereby people should come here and invest. And this is exactly how the family offices are using Hong Kong as an investment hub for ESG-related investment. They can find green bonds easily. We talked, by the way, to these families, and when they are investing in green bonds, they sometimes think about investing in bonds with longer duration. It is very interesting that green bonds usually are very short term, 3, 5, 7 years, long duration. In fact, with the demand coming from the insurance industry as well as the family offices, we have advised the government to issue green bonds that could be lengthier. And earlier this year, we have seen the government issuing a green bond with 30-year of duration. So it's almost one of a kind for now. If not, it's at least one of the earliest that we have ever seen that by. So again, it really builds back to our own very own ecosystem, and that's why the family offices are using it. I want to go back to what Derek mentioned earlier about PE investment. Yes, we want to ensure that these firms, even before they are being listed in Hong Kong or the other markets, they are putting their minds into ESG related matters. So getting prepared and not to make it ESG an afterthought is very important too. So we are trying to do the education prior to the listing of such firms. And by the way, in Hong Kong, we are the second largest PE market in Asia after mainland China. So there's no other place, no other choices besides Hong Kong for family offices to establish their presence, I think.
Thank you for that good point. And then I would like to ask also Eric, is about how you think of ESG factors in your family office investment. That's forming a more solid ground for why companies and their boards should take the ESG more seriously.
Absolutely. As I mentioned earlier about do well, do good, I think truly it's a phenomenon that is touching all the families. Why? Because they got many generations, and obviously they want generations to live healthy. So that's number one. Number two, bear in mind they also run businesses, so they're also learning from you guys. So if we have an interesting angle, that would be helpful to them. In the association, we often help family office on governance. Governance is phenomenally important to them. And within the governance framework, often ESG would also be part of it because they run their own family business. They have an investment angle, and they also have multi-generations to deal with how to pass the wealth and ideology to the next generations. And believe me, within a governance framework, ESG is often a layer, I think, a layer to it. So I would say everything you do, if you sort of have an angle to that, that would be really appealing to the families.
Thank you, Eric. So I talked about this governance. So Mr. Jin Zhong, can you share with us also how you view of ESG factors in your investment?
Okay, so I think ESG is definitely an important factor, and also is a trend recently. But to be honest, for our family office at the moment, the ESG is not yet one of the important factor when we do the investment decision. But we believe a company who has strong ESG or who is focused on ESG should be a sustainable and should be able to survive longer. So that's why I think in the future, we gradually will consider ESG as one of the factors. And also what we do is because we have a very diversified portfolio, and there are some companies or even in the sector are not quite traditional ESG sectors. So they have some good investment opportunities. So if we have such investment investment targets in the portfolio, we try to use some other company to compensate or to balance the whole portfolio to make sure the whole portfolio will comply with the ESG. So I think ESG is going to be an important factor for all, not family office, should be for all the investment managers going forward.
Thank you, Jin Zhong, for your valuable opinions. And Eric, do you have something to supplement?
Sure, I forgot to say one point. If you look at how to crystallize and conceptualize the ESG concept, one example, you look at the UNTRI framework, which a lot of institutional investors are already following. I think that would be key, because I think that framework will trickle down into the family office world. So if you want to prepare your company with a framework or any recognizable framework, I think it's much easier for you to present that angle into your family office potential investors, and UNPRI work as well.
Thank you, Eric. So I would like to also invite Elsie to the last question is how to promote ESG as family office. As I mentioned before, we are a listed family office, and I think the best way to illustrate is through one of our recent examples. About 3 years ago,
knowing that we have a heritage in real estate and also our interest in alternative investments, not actually in the Asian region. We actually have a theory of dislocated return. So what we have done is 3 years ago, we invested in the modular housing sector, where it's still an emerging sector in the North at the time. Our focus for our listed family office part in the investment side is next gen technology, i.e. things that will come to the reality, not taking an ESG angle yet, but just technology or advances in robotics, etc., that will make an impact to the society in the next generation and the commercial impact at the same time. So we invested into modular housing, thinking that this is a new attempt, this is a new story, and recently we have a very successful exit within 3 years, and the multiple is about 2.7 times. The exit is actually an ESG exit with Europe. We didn't realize at the time that when we are focusing on just the building modular real estate business, the next generation of product, the ESG community or the ESG arena is actually broadening very quickly. So what was not considered as an ESG modular housing, actually right now, modular housing is considered part of a critical ESG element in a lot of pensions, in a lot of sovereign investments. So when we are trying to just refinancing our opportunity, all of a sudden we got a lot of offers, which is all treated out in our original investment, which is a real estate dislocated return theory, into an ESG, and we're happy to see that our strategy of course pay off. But that is also a lesson learned for us is when we are looking at opportunity, a lot of times some of the ESG projects that we have come across, that we have screened so far, are longer tenure infrastructure type of project, which at the same time cannot meet the return hurdle of our shareholders or our stakeholders. So we were not able to participate. However, a lot of the next gen technology, energy saving, energy solutions, in green tech, actually those are considered next gen, but actually over time, those are ESG projects, all of them are ESG related. So I think for us, is when we consider ESG, we do not just see the ESG label, we also consider the real impact it can make at the exit, as whether it's ESG compliant. So we take a more progressive approach and broad approach towards ESG, because we think, as Eric had mentioned, you can do definitely do well from our what the lesson learned and also contribute.
Thank you, Elsie. So let us know how you're going to incorporate the ESG factors into your business and also help the company in the operation, in the strategy, even the financial results. So thank you all for your presentation. And now we come to the Q&A section. So please feel free to ask any question for the speakers to answer, and also please feel free to type your questions on the chat box on the Zoom, and we can read it to the speakers. Any questions?
Hi, this is Jack here from the AMTD. Just want to ask a question on that, like investment style for family offices in general, like because they own businesses, as you mentioned. Like, is there any trend that whether they're, in general speaking, whether they're looking for investments that diversify away from their own business, like looking for diversification opportunities, or whether in general they look for something that they are familiar with, like they run their own in their own industry and all that. Thank you.
I'll start. Let's give an example. We're in AMTD, so let's talk about Ikashing, right? If you look at Ikashing, I'm outdated, but I think his net worth is about 30 to 33 billion, somewhere in that neighborhood. And Hutchison Chung Kong, I think it's about 20, give or take, if I'm not mistaken. And the last 1/3 is actually Zoom, and I think a bit in Beyond Meat and stuff like that. So if you look at one of the richest person in Hong Kong, they got O Economy, which is property, Hutchison, everything, and 1/3 of his worth is actually coming from Zoom and Beyond Meat and a few other things, Impossible Food. So
I think a lot of older economy generation would look more into the new economy. Yes, I think they also would look into that. Properties they always have. They always got some fixed income, but they would also look at some private debt. And I think education, health, and consumption, because it's easier for them to understand. I think the deep tech and stuff that people may not be easily for them to understand, they might not really invest a whole lot. But if it's consumption, health, education, stuff that they could feel in touch, they use, then it's probably easier for them to understand and easier for them to invest. So that's my 2 cents.
Sure. We can share the ones that are exited. When our listed family office first got the capital and invested, one of our transactions that we invested is actually based on not the sector that we're exposed to, but the product and the heritage of the family, which is in the privatization of biology that we participated in. That is a transaction that's involved in structuring that, and they restructure the corporate restructuring, something that the family understands this product and this type of transaction very well. So that's how they participate. It also happens to be in healthcare. It happens to be in a relatively favorable market to privatize. So that's what I think the heritage of the family, their product or industry know-how definitely will place an advantage to the companies or to the party who are seeking capital. That just bring home the memory, and it's much easier and quicker for them, for their professional to review the opportunity. That's pretty much our lesson learned. The other one is actually, I think not everyone, but I would say majority of the family office right now will be a believer of technology, and then especially now it's next gen technology, because we have seen and witnessed the blossoming of the Chinese and the Chinese internet market, the digitalization of the processors, etc. So I think everybody become a believer, but the difference might be each family office would have their own background and heritage, or what we call it a comfort zone. So they would tend to focus using their own comfort zone and their background to determine which level of the next gen that they are willing to participate. If somebody is really innovative and willing to participate in early stage angel investor round one, but somebody may be looking for more stable return and more liquidity and closer to liquidity, closer to market opportunities, then they might join a later stage. But I think next gen alternative, because the holding power of family office is they're there forever. They assume that the family has to go for the next 100 or next millennium for sure. So that's why they tend to favor opportunities that they can hold for longer term and look for longer term return. So that's just our experience share.
To add on to, I think, what the speakers have said just now, I think the vast majority of these family offices, they own their own family business. So whenever you can identify a synergy with a potential investment, it's like much easier to catch your attention. For example, I think recently, a couple of examples, one company they're in the battery business. But they invested in one of our projects, one of our clients' projects, which is an online music service, online festival company, because they can see that as a strong way to promote their battery, which is battery, and also their own speakers business, which has expanded into cooperating with them on smart speakers, music libraries, etc. And also, for example, online go-to channels or global platform. Recently, we introduced that to one of the Hong Kong families, which is best distribution company. This is China, so they have synergies in terms of providing better experience with customers, etc. So they may not strictly invest only in sectors that are familiar with, but as long as they can find some synergies with their own family business, usually it's a big plus.
Just want to add that I think the Hong Kong Stock Exchange has a nose for trends, and back in 2018, there's this thing that we all know. So there's the introduction of the weighted voting right
like pre-profit biotech companies being able to list in Hong Kong. I think this is really much the investment appetite of the universe, not only for family offices. So like these two particular categories or industries would be the trend. That's the first thing. The other thing that I would like to add is I think the trends of family offices in China, mainland China, and that in the rest of the world could be a little bit different. Think about the family offices in mainland China is probably the first generation passing on to the second generation. And so, whereas in Europe, that could be third, fourth generation passing on to the fifth and sixth. So the involvement of these different generations of big families would lead to some different differences in investment appetite. And so what we have seen in our research journey is that for mainland Chinese firms, they are really looking for global opportunities in addition to such in mainland China, because they all have access to deals and whatnot, among the peers. But like when they use Hong Kong as a family office hub or investment hub, they are really going global. And so they are seeking opportunities not restricted to the fields that I mentioned, the healthcare and also like tech companies based in other markets. On the other hand, when like international families set up their operation in Hong Kong, there's a reason, and that is to access the mainland Chinese market. And so I feel that when they go into mainland Chinese market, they're not going for some traditional they're not going for some traditional assets delivering low yields and low capital gain potentials. They are really going for the exotic ones. So that's what we have heard from. And I'm not running a family office per se, but from our research, and that's what we have heard.
I guess one last point to add, in my view, the wealth connect that are coming. I think all of you listen out personally to see how you synchronize and how you fit into the scheme. Obviously, it would be by basis. I think the first phase is pretty conservative investment. But if you help position what you're offering to the family office from China coming down the health connect, that would be quite a big trend that I think as an industry we all should look at, in my view.
Thank you, Eric. So we also have some questions online. The question is, what are the additional challenges family office face when doing their public or private investment compared to traditional asset manager? Maybe we start with Xingyong first.
Okay, I think that's a very good question. And so far, from my perspective, I see a lot of advantages for family office when doing investment compared to traditional. If you want to know really know the challenges, I think there are two challenges compared to traditional. One is the size of the investment, because from the family office perspective, they want to manage the risk, so they don't want to be very concentrated in one or two investment opportunity. So once we come to the public or the private investment, sometimes we are interested, but the size may be not suitable for the family. And also how we can get attractive by the IR or by the company if we only invest a minimum amount of the investment. So we cannot get attention from the public company. So that's the first one. And the second challenge is we are the family office. We have to be responsible for the family. So we have to construct a customized portfolio for the family. However, traditional asset manager, they invest money for institutional or any other high net worth individuals. Their mandate is just focus on what their original strategy is. But for the family office, because we have to be responsible for the family, so we have to be very customized. Every public or private investment, we have to think in the perspective from the family, not only on the investment itself. So that's the two challenges I feel so far.
Thank you, Jin Zhong, for sharing with us the two challenges. Eric, do you have anything to add?
Sure. I guess acronym TCL. T is transparency. I think especially private investment, how much info they can get and when. C would be control. Some family, if they invest quite a lot, they would want to foresee. They would want to negotiate certain protection terms, anti-dilution, government protection, and various technical stuff. So I think control or not would be the second point. L is legacy. Legacy would include ESG. Is it ESG related? Does it look good when you read the newspaper that certain family invested in certain companies? Would their son, liked it? They what gone through in their mind are actually a lot more different from the sovereign wealth funds and other capital that I managed before. So I would say if you kind of focus the TCL path, that would be a good way to position the companies with the families.
Thank you, Eric, for sharing interesting detail. And any more questions on side? Okay, thank you all. So, ladies and gentlemen, I hope you find this afternoon presentation very informative and useful. And thank you for spending time with us. We would like to invite the seminar attendees to participate in the survey, short survey, and share your finding about this presentation. It will take about 5 minutes. And finally, I would like to also mention the results of the Hong Kong IRA Award will be announced at the end of July, and there may be a physical awards ceremony in September. So I would like to thank you all for attending our event seminar today, and I would like to thank all the speakers here for sharing with us very valuable opinions. Thank you all. Thank you.